Hello, investors. This is Ted Zhang, Portfolio Manager at Revere Asset Management. Today is Wednesday, April 2nd, 5:42 p.m. coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. State of the market, we are still in a moderate correction. Looking at the trend gauge, we flipped pretty much March 27th and March 28th to the four low down arrows. We do not have the four coveted arrows. This is the opposite, and we are in max protection mode right now. And even some short, especially in the turbo portfolios. Um, what happened today? Third gap down reversal in a row ahead of Trump tariffs. The reason I put three asterisks next to this title and it's in red is that after hours, Trump at 4 p.m. announced his tariff policy and signed it with an executive order into effect starting midnight today. And I'll go over the price action later, but let's go over this quick overview first. The Big Eight was up 1.04% today, but that will be down after hours. RG8 up 1.72%. That will be down after hours, but I'm unable to extract the after hour prices of our composites. S&P up 0.67%, but after hours down 2.64%. At one point when first Trump started speaking, we were up about 1%, but once he brought out the reciprocal tariffs chart, which I will definitely find a picture for you guys and show it in this video, the markets took a slide quickly. RSP up 0.84% today, but down 2.2% after hours. QQQ up 0.73%, but down 3.39% after hours. The Qs at one point were up 1.3%. So this is nearly a 5% swing due to the Trump tariff announcement. QQEW up 0.71%, but down 1.24% after hours. Dow Jones up 0.56% today. Mid caps up 1.56%. Small caps up 1.65%. Remember, the caveat is that all of these will be down after hours, and we'll see what happens overnight. Maybe we recover all the losses, but right now it's looking like an ugly open tomorrow. Global 60/40 equities bonds up 0.28%, and GROTECTION pretty much flat, up 0.02%. So jumping right into the charts, or the chart of the S&P 500. Give me one second. Let me just get that reorganized. We had a day three rally. This is a third day in a row where we gapped down and rallied, but we didn't even get to the 21 EMA here, let alone the 200-day moving average. We did reclaim this 5670 level, which is one of the key levels, at least horizontal levels going back in the chart. But right now we're just in this range between 5500 and about 5800. After hours though, S&P, let's just use SPY. Wow, it's actually down now 2.84%, currently trading at 548, which is pretty much back to these lows actually. So that would be key to see if that holds. RSP, we rallied into the 21 EMA, but down 2.5% hours, trading down 170, 170.48. So back to the lows 3 days ago. Qs rallied, didn't even get to the 21 EMA, and now down 3.4% after hours at 459, about 460. So back to those lows of 3 days ago as well. So tomorrow will be key, especially overnight trading. See how we open and how we trade tomorrow. QQEW, pretty much same thing. Rally today, gap down, reversal. Pretty big reversal actually, but after Trump tariffs, down 2.14%. And I will get into the Trump tariffs during the tail of the tape section for sure. Dow Jones rallying the 200-day. I'll use the DIA to get the after hours price down 1.55%. Mid caps rallying the 21 EMA, and I'll use MDY as our proxy for the after hours price action down 3.6%. And then the Russell small caps didn't even get to the 21 EMA. This is the weakest of the indexes, or the major indexes. And with IWM as a proxy, it's down nearly 5% after hours, down to 193. So Russell leading the way down, extremely weak action there. VIX closed at 2151. Don't think I have a live VIX price right now. Yep, I don't. So we'll see where the VIX opens up tomorrow. Volatility is definitely elevated. Dollar continues to slide here, breaking the bear flag, and we don't have after hours price there as well. GLD continues to make a new all-time high, up another percent to 291 off this tariff news and fear, making a new all-time high there. Gold miners following suit as well, looking to make a new all-time high. Silver also up about a percent at 31, breaking out this another flag right here. Bitcoin down 3% after hours after initially rising on tariff news. And then finally, let's go to bonds. Yields rallied all day, rallied after Trump initially started talking, but now completely have faded so far, which means bonds have rallied after hours along with the yields dropping. So that being said, that is it for the inter-asset correlation. Now let's talk about the tail of the tape, Trump tariffs, and what happened today in more detail. So we're under moderate correction, operating in the bear case below 21 EMA. Today's news, we had ADP employment coming stronger than expected, and we have jobs numbers this Friday, unemployment rate and non-farm payrolls. And of course, big news was at 4 p.m. Trump announced a 10% universal tariff across the board. But then, so he announced 10% universal tariff across the board, 25% tariff on autos coming in. But the big hitter, I'll have to find it, give me 1 second, was this chart right here. Let me bring it up. Right here. Let's pull up the photo. He brought up a chart similar to this, except the White House X account posted a more comprehensive version. He started listing off the USA discounted reciprocal tariffs. Trump actually referred to them as soft. If we truly went reciprocal to every single country, the impact on the markets would be far worse. Pretty much what Trump and his administration are doing is pretty much what they're doing is reciprocal tariffs of 50% of what other countries charge us. So as you can see, China charges us 67% on tariffs. We're doing 34%, but this is on top of the 20% that is already charged. EU 20% versus 39. You get the memo. 46% for Vietnam versus 90, and that goes down the board. However, 10% is the baseline. So if other countries only charge us 10%, we charge them 10%. If other countries charge like 12% Trinidad and Tobago, we're not charging them 6%, we're still charging them 10%. So this is pretty much how the tariffs played out. He signed an executive order. It's into effect. Everyone's saying that these will not be relaxed anytime soon, and the markets are definitely taking that seriously. Another thing I want to point out is Geiger Capital's post. He posted this chart from Census Bureau. The overall weighted average tariff is now 29%, which is the highest in over 100 years, bigger than the Smoot-Hawley Tariff Act. And we all know that after the 1929 crash, coupled with the Smoot-Hawley Tariff Act, that did lead to the Great Depression. We are in a different regimen right now, but the fears are that the Trump tariffs will cause a global recession. And right now, equities are reflecting that. Bonds are too, with yields dropping. And I'll get into the rest of the tail of the tape here. SP strong sectors today. Bond yields were strong. Bond prices are down, but obviously that's changed after hours. Dollar was strong. Discretionary, industrials, financials, biotech, RK, Bitcoin. On the downside, staples, China, copper. But of course, put these all in asterisks because we are having big price swings after hours. RVAB 0.27 minus 1.06% open heat. And bottom line is third gap down reversal, but big after hours dump on Trump tariffs. So as we've shared in the prior videos this week, the 21 over 21 list is under construction. So I do not have a list for you to share today, but I kind of want to just walk you through my personal thought process right now in the markets. When we look at the S&P or the NASDAQ, we've been in this correction for a few months now, or a couple months. And over the last couple months since Trump has assumed office, Bassett-Letnick, Trump's Treasury Secretary, and Trump's Treasury of or Secretary of Commerce, and Trump himself have pretty much been quite clear that they aren't really looking at equities and they're fighting for Main Street versus Wall Street. They explicitly even said that on a TV interview that he believes Wall Street has had enough fun right now, and it's time to revitalize the lower middle class, the working Americans, and quote unquote Main Street. And what that means is Besson has outlined it, for example, in the All In podcast. He believes this is a three-pronged approach. The first is Doge and the government. Hopefully, Congress will cooperate, will enact spending cuts and eliminate waste, fraud, and abuse. So that takes care of the spending side of the equation to address their deficit. And then on the other side, they hope that tariffs, as well as the Trump gold cards and other forms of revenue generation, will help balance the budget or at least bring our deficit down to the 3% targeted level. We'll see if that happens, but that is their goal. And that is what's stated by the Secretary of Treasury, Scott Bessent. Also, a huge part of their plan is with tariffs is to incentivize onshoring, to bring back manufacturing in many industries back to the US so American workers can have higher paying jobs instead of being robbed by the lower paying international offshoring manufacturing in China or in Mexico or in cheaper countries with cheaper labor. So that is one of the main purposes of tariffs, but it is also to generate revenue as well. And we'll see what happens in the next 12, 24 months. And really, another final big problem that Bessent has addressed is that we have $7 to $10 trillion in bonds or treasuries maturing this year. And if we don't get the 10-year rate down or 10-year yield down, we'll have to refinance that at the current levels, which is above 4%. And that will just only add on to the interest burden for our federal government. And we're already paying close to 1.25 trillion a year in interest, which is more than our defense budget, which is around like 800 billion. So we're paying nearly 50% more on interest payments than on defense budget. And if we continue on like this, our interest payments will surpass Social Security payments, yearly payments. So that will not be good for people on entitlements, the American citizen, and for our federal government. We're heading to bankruptcy if that continues. So that is the main issue. And I believe that pain in equities won't stop until the 10-year heads lower. And my personal opinion is that part of this tariff strategy, yes, is to bring back jobs to the US, but for how extreme they are, in a way, I do think the administration is potentially looking to cause an economic slowdown, as many have speculated, so that the 10-year yield will come down, so that the Fed will cut rates, and then they can refinance the debt. So, of course, can't read Trump and his administration's minds, but we can only pick up some clues along the way in their interviews and the podcasts they attend. So, with that being said, we're in full risk management mode, still building our 21 over 21 list, looking at relative strength. Actually, I'll show you a couple charts with relative strength. EXCs continue to make an all-time high. It's the biggest natural gas producer in the US. CVX is another oil name holding up well. XOM, and the XLE is the energy ETF, doing really well in the face of this market. So with that being said, I'm going to wrap up this video. If you're interested in becoming a client or have any questions, you can reach out to me at ted@revereasset.com or at my ex Twitter, Ted H. Zhang. Our phone is 855 Real Wealth. That is 855-732-5932. Our website's revereasset.com and our YouTube's Revere Asset. So I'm going to wrap it up now for Wednesday, April 2nd. This is Ted Zhang, portfolio manager with Revere Asset Management, telling it like it is. Thanks for listening and have a great rest of your week.